I'll tell you a little bit about me in a second. So I've got Kalvin here from the Forecastr team, and he'll be here just kind of supporting me on this webinar and working the chat and that kind of thing. And yeah, just excited to be a part of this. Love working with Grid 110. We've done it for a few years now. And I'll share my screen and we'll get started. We got a lot of ground to cover, and we're going to be talking today about how to use a financial model to raise capital. So we call it how to use a financial model to impress investors and close checks. So we're gonna really kind of zoom in on a financial model and what we call like a numerical narrative, essentially like how to tell your story using the numbers, and how to use a financial model to just like increase the chances that an investor is going to say yes, is going to write you a check, is going to invest in your company. So hopefully that'll be really valuable for you all. And as we go through this, please do be liberal with your questions and that kind of stuff. If you feel most comfortable putting it in the chat, you can do that. Kalvin will flag it up for me. If you prefer to raise your hand or even come off mute, I mean, I'm pretty casual guy, so I'd say we can keep it pretty loosey-goosey, and I'm here for y'all. So if you got a question, please don't hold back, don't hesitate. You're certainly not going to be interrupting me in any way, and would just love to answer those questions for you, because that's what we're here to do, here to help. So that out of the way, a little bit about me and kind of what gives me the right to be up here talking with you guys. So I'm Steven Plappert. I am the co-founder and CEO of a company called Forecastr. And Forecastr is an online financial model for your startup. So we work with hundreds of startups. We've got over 600 customers. We've been running the company for about 3 years, Logan and I have. We've got 30 employees, about 1.5 million in annual revenue. And so all we do all day is build financial models for venture-backed companies and help founders build a great financial model that they can use to raise capital and they can use to hit their growth targets and manage cash. So been doing that for 3 years, but I've been an entrepreneur for 10. So I started my first company back in 2013. It was a consumer gaming company called Fantasy Hub. We were like DraftKings or FanDuel. We were doing real money online wagering back when it was cool, back when it was legally ambiguous. And so that's how I cut my teeth and got my start, was building that company. I took it through Techstars Austin in 2015. And I've taken Forecastr through Techstars as well. So I've been through Techstars twice with the 2 companies that I've started, and 4 years in between. So I had 4 years of a gap between Fantasy Hub and Forecastr. I spent that time as a fractional head of finance for a variety of early stage companies. So worked with a lot of pre-seed, seed, and Series A companies over those 4 years, building and managing financial models, helping those companies raise capital, and really just kind of managing the financial health of those businesses. So yeah, I've spent the last 10 years basically as a founder in the financial function, raising capital. And so I think this is a topic that I can speak really well on, and I hope that I'm able to add some value for you today. As far as Forecastr, it's an alternative to Microsoft Excel when it comes to building and managing a financial model. Really, it's like a whole kind of out-of-the-box finance function. It's a great software. It's a great product. I think founders really love it. It's a lot more visual. It's integrated with your accounting. It's a lot less error-prone. So I think it just really kind of lowers the barrier, when it comes to like getting a financial model set up, which can be really nice. And we have a whole kind of human function behind the software. We run, we do analyst support, CFO services. We do a 30-day white glove onboarding. Like, we take a really human approach just to make sure that you get the best model and that you really know how to use it, how to present it, how to manage your cash flow, that kind of stuff. So if you are interested in checking Forecastr out, you get a discount. So we're proudly, partnering with Grid 110 on this, and we give 25% off to any Grid 110 companies. So if you're interested in Forecastr, you get $500 off. We'd absolutely love to get the chance to work with you and be a part of your journey. So encourage you to take a peek if that's something that you want to do. That said, I'm not here to get you to become a customer of Forecastr. I'm not here to sell you on my business. I'm here to talk about how you can use a financial model, no matter where it lives, to increase the chances that you can raise capital. and it's a tough market right now. It's a tough market to raise capital right now. I'm actually out in the market right now raising $4 million for Forecastr. And people are a little bit skittish. I don't know if there's any other SVB customers out there. We banked with SVB, but it's kind of a scary weekend, and a lot of investors, are still kind of feeling that. And so I think kind of now more than ever, it's important to really, put your best foot forward, to really be buttoned up when it comes to raising capital. And you are going to get a lot of tough financial questions. Investors really want to understand that there's kind of good financial rigor, financial hygiene, behind the companies that they're investing in right now, because it is, a little bit more of a tumultuous market out there. So that's what we're going to dive into today. We're going to talk a little bit about what we call the power of a great financial model. So just what is a model? What is a model? What's it going to do for us? And then we're going to get into how we would use that model in a pitch deck to increase the chances that we're going to convert the investor into a diligence process. That initial pitch really is kind of a set the hook meeting. Its job is to convert the investor into a diligence process. Your model is one of the things you can kind of tease them with, and we're going to look at how to do that. And then we're going to talk about how to present your model to investors. That's really kind of where the lion's share of the value is in fundraising when it comes to a financial model. Is you want to sit down with an investor, you want to present the model to them, and you want to use that as kind of a launch pad to have a strategic conversation about the company. And so we're going to talk about that. And then we're going to get out of the classroom, so to speak. We're going to look at a real world example. So I mentioned we're raising $4 million right now. I'm going to show you my pitch deck. I'm going to show you how we use the model in that pitch deck. I'm going to show you my model, and I'll walk through our financial model in part, like I would do for an investor. And I'll kind of tell you why I do it, how I do it, and that kind of thing. And my hope is that when you see it in action, it'll make it kind of more actionable for you. You'll be able to say, okay, how could I do something similar for my business? And maybe I could achieve similar results. Because I will say, I've done 4 venture rounds myself. I've raised close to 10 million in venture capital at this point. I've been a participant and like a head of finance for companies raising, I'd say, somewhere like 20 to 30 million. I've been a part of maybe like 10 or 12 rounds in total. This stuff really does work. It really does have a tendency to drive investor trust and confidence. So I hope and trust it'll work for you as well. So what is a financial model, right? I think a phrase that gets used a lot of ways, and I find a lot of people have kind of a different definition for what it is. We like to use this analogy, and it's an auto industry analogy where, if you look back at kind of the 20th century, this is how cars were built. Cars were built out of clay. They didn't have any kind of computer systems or anything like that. So they would just say, hey, I think this car looks pretty good. I'll, kind of sketch it out on paper. I'll build it. They'll build the car. They'll put, some brave soul in the car and have them drive it around a virtual, kind of a test track, if you will. They drive it around, try to see if it works. And inevitably it didn't work because they built it out of clay, and there was a fairly, not precise process. And so they have to kind of go back to the drawing board and build another car and build another car. It's very difficult for them to kind of to forecast, to predict, if a car would work when they built it. And nowadays nobody does that. Nowadays people build cars using computers, using virtual systems. They build cars online, if you will, or in these software systems. And so it saves a lot of money. It saves a lot of time. Nobody's getting into a car that might flip, right? Like we can iterate on cars much quicker because we have these simulators. Basically, we have a system that can kind of simulate a car before it's built. And I think this is ultimately the power of a great financial model. I think if a financial model, if you do it right, is a business simulator. It should essentially simulate your business into the future. Its job should be to try to help you understand how your business would perform in a certain environment, right? And this can inform you of a number of things. On the front end, it can tell you, hey, like, should you even build this business? Is this a business that's worth building? Is this a business that can be large? Is this a business that can be profitable? How much capital is it going to take to build this business? How many customers do you need to sell at what price point to get $1 million in revenue? Or how many people do you need to hire in order to scale the business? Like it should help you answer a lot of these questions, which are critical to you. when it comes to deciding if you want to build the business, when it comes to deciding how you're going to build the business. But importantly, in the topic that we're talking about today, it's important that you can communicate these things to the investor, because, if I'm an investor and I'm looking at your company, as awesome as you are, as cool as I'm sure your company is today, I'm not really investing in your company today. I'm investing in the future of your company. I'm investing in the idea that 5 years from now, your company is going to be a lot bigger, it's going to be a lot more profitable, and it's going to return me a lot more money than I'm going to give to you. That's why I'm investing. And so we need to, as founders, we need to like paint that picture. Like we need to kind of show the investor the pot of gold at the end of the rainbow, and then show that we know how to get there, right? We need to build trust and build confidence and build conviction that we know how to get to the pot of gold. And a financial model is one of these ways that you can kind of get the investor in the car next to you, right? And like take them on the virtual test track and really communicate to them that like you've thought through your business, you understand how you're going to scale your business, and that there's a big business to build, in your particular market. So that is really why we want to build these financial models. And what these financial models are going to do from a fundraising perspective is they're going to help us answer a lot of questions. And these are questions that we should be having for ourselves as founders. When I decided to raise this 4 million, I didn't just kind of pull that number out of thin air. The model's telling me that I need 4 million in order to hit certain milestones. Like I want to hit 7 million in annual recurring revenue. And so I need 4 million in order to get there, and so, these models should be answering these questions for us, but they're also going to be answering these questions for investors. And so, an investor, when they're doing diligence on your company, when they're considering investment, they're going to ask you a lot of questions. And some of those questions will be numerical in nature. They may ask you, how are you going to spend the money? Or they may ask you, what customer acquisition channels are the best, or what's your CAC, or how many customers do you expect to acquire over the next 12 months? A lot of these questions can be answered with a financial model. And so I think if you have a model and you use it well, you can answer these questions better. You'll be more prepared for the questions, but also you can sit down with an investor and you can walk them through that model, and you can really give them confidence that you've thought through that element of the business. And that has a tendency to really increase the conversion rate when you're presenting to investors. One more thing here, and then we're going to dive into what it looks like in a pitch deck. And that's just kind of an opportunity, slide here where, for me, we're kind of at the Series A stage of our business. And so a financial model, you get less brownie points for it as you go up the curve. It's kind of table stakes. The better model that you have, the better you can present it, the better off you are. But I actually think the best time to build a model when you're thinking about fundraising is pre-seed and seed. And the reason for that is it's really competitive. Fundraising is it's a competitive process. A lot of investors may see 30, 40, 50 deals a month. They may only able to do one of those deals. And that means they're saying no to a lot of great deals. Like a lot of companies don't get funded, not because they don't have merit, not because they're not great founders, just because there's not enough money to go around. And so it's this competitive process where you got to be looking for every way you can to separate yourself from the pack. And I think at a pre-seed and seed stage, if you really take this stuff to heart, if you build a financial model and you know how to present it to investors and you do that well, I'm telling you right now, you're going to look head and shoulders above the rest. There's a lot of founders out there not doing this stuff. And so, when that investor gets to the end of the road, right, and they're looking at you versus this other company, you got a model, you presented it well, like you really showed the investor that like you understand the financial aspect of your business and they don't, you're going to get the money. You're going to get the money 9 times out of 10. So I think that's something to consider. I think especially right now in this market, you got to be looking for every single way you can to separate yourself from the pack. Having a model and presenting it to investors was one of the ways that you can do that. We're going to dive into now using the model in the deck real quick. I'll do a quick pause and just to make sure if any questions so far, anything we've covered, anything like that. If so, happy to answer.
I have a question.
Please.
I'll turn on my camera here. Hey, my name is Warren.
Hi.
I honestly just made my financial revenue document maybe a couple days ago, and I just went through your website to book some time.
Great.
Is there a way that I could book time with you personally after the call? Like, could you put a link to do that?
Absolutely. So I will be sending over, and this is a great time to mention it. After this call, I'll be sending over a number of support resources. That will include my personal calendar link. It'll include a link to my sales team. If you're interested in becoming a customer of Forecastr, taking a look at the Forecastr product, you link to get a demo. It'll also include a link to our analyst team. And so we do a white glove onboarding. We spend 30 days with every customer, making sure they get a great model. It's a really kind of human-led process. We also offer up 30 minutes of the analyst team's time to answer questions completely free of charge. We call them model help sessions. So you'll get a link to book a model help session with our analyst team if you want to do that. And then you'll also get just kind of some resources from us, some templates, as well as a link to our blog, which has a lot of great information about financial modeling. So all that's coming your way in whatever way Maya thinks best. And yeah, so it's a great question. And thank you for taking the look. And also, that's awesome to hear that you got your financial model started. You're on it. So I love to hear that. Cool. Well, so how do we use the model in the pitch deck? You know, everybody's familiar with the pitch deck, right? That's usually always the first thing folks want to build when they want to raise capital. So really easy. All you got to do is put the output of the model in the deck. So nothing too fancy, nothing too flashy. You know, do a financial forecast slide. You just want a summarized income statement 5 or 6 years into the future. And all you're trying to do with this slide is you're trying to communicate to the investor, hey, you've thought through the business. You've got some financial rigor. There's some meat, you know, on this company, right? You know, you've done your homework. So you're trying to tease them with the projections. This is the output of the model. A financial model is this kind of mathematical simulation engine, right? It's producing a set of financial statements, your income statement, your balance sheet, your statement of cash flows. You want to give them the summarized output of that, you know, so that you can kind of tease them with that. You say, look, this is going to be a great business. Like we've done our homework. We've looked at this thing. This is a venture scalable company. This is a big company, you know, and you want them to kind of be thinking, hey, you know, where did you get those numbers? And we're talking a little bit more about that. But yes, we got a question. Is it Amia, or how do you?
Yeah, it's Amia. I think you just answered the question that I was going to ask, because I was told that like a tease deck is more efficient because it gives the investors time enough to like ask questions about your business. Because when I thought about doing my pitch deck, like it's all of these different pages, but I want to figure out how to condense it so that I can just, like you said, do a tease deck so it's not so just full of pages, full of the ideas, full of all of the things that's straight to the point.
Yeah. Yeah, it's a good strategy. And when we jump into the kind of real world example piece, I'll show you mine, because I actually have a teaser deck that I call an intro deck, and then I got a full deck, and I'll quickly walk through both of those. And I'm also happy to share these decks. I'll throw those decks your way as well. That way you guys could use those as a reference too.
And do your company do the decks? Do your company do decks?
So we don't do decks, but we have one of our investors does. He designed my deck, you know, and he's awesome. It's called Super Slates. And very, very affordable as well. So I'd also be happy to share some information about Super Slates and how you could get a nice deck design for a reasonable fee. So
yes, thank you so much.
You got it. So you really, you just want to have this output in there. And by the way, and you'll see this in my deck, this shouldn't be at the front end of the deck. It shouldn't be it shouldn't be a kind of a big factor in the deck. Really, it should be kind of near the end of the deck. I think in any deck, you should focus on, you know, problem, solution, vision, your metrics, your team, right? Go-to-market strategy, core elements to the business. Things that are going to get the investor excited, things that are going to set the hook. You know, the financial forecast is really something that should be at the end of the deck, right before the ask, something that's just meant to try to convert the investor into taking a second meeting with you. Because when an investor sees this, they're going to look at the revenue picture and they're going to hopefully say, hey, you know what? That looks really attractive, but that looks kind of reasonable. I could see that happening. You know, where did you get those numbers? Where did those numbers come from? That's what they're going to be naturally thinking. And that's going to play right into your hand. You know, you're going to say, hey, you know what? I've actually got a great financial model that I've built for this company. This is how we derive this forecast. I'd love to spend 45 minutes with you sitting down, walking you through our financial model. And I think that would really spur a lot of interesting strategic conversation about the business. and it would allow us to kind of better get to know each other and see, do we want to do business together, right? Do we want to build a partnership, right? So that's what you want, because getting investment is about understanding fit on both sides, and that happens through human interaction. So you want to have that first pitch, yes, but then you want to maybe walk through the model or demo your product or get them to meet your co-founder. You want to create interaction points where you can develop a deeper relationship so that you can convert that investor. And you want to try to control that process as much as you can. You don't want to leave it up to like, well, let me know what you want to do next. You want to kind of say, hey, that was a great first meeting. Why don't we spend 45 minutes going through the model next week? Does next Tuesday work for you? You want to drive the process. You want to push people through the process, because if you don't, they just drag their feet. Investors just sit on their hands is what they do. And they just kind of wait and see until something happens, right? Until you get low on cash or until someone else comes in and leads the round, and they all just try to pile in, and that's kind of the investor and what's in the best interest of the investor. So you have to push them through. You got to shepherd them through the process. And if you just kind of have a good leadership, good mind about it, you can do that. So now we're going to talk about how to present the model to investors. This is by far, I think, the most complicated piece. This is the piece that I find that you can get right or you can get it wrong. There's a lot of different, it's a choose your own adventure game, right? You can do a lot of different things. So we're going to talk about how I think you should do it. And hopefully that resonates with you, and hopefully you can carry that forward into your process. So a couple notes here, and then we're going to dive into my model. One is, before the meeting, don't share the model. Don't share the model on its own. Hold the model hostage for the meeting. Get the meeting. Reason why you want to do that is when you share a model on its own, an investor's going to peruse it. They're going to go through it naturally. You're not in the room when they're doing that to help steer their opinion in the direction of your favor, right? They're going to look at that model. They may find a number of things that they don't like about that model, and they may form a negative opinion about your business, and you're not in the room to change that opinion. And then if they do give you a meeting, you're playing catch up. They're over here defensively saying, I don't really like this business, and you're trying to convince them, to feel differently, versus if you hold the model hostage, right, for the meeting, and you're presenting it to them fresh right then, you're going to catch any of those objections in real time. You're going to be able to overcome them more easily, alleviate concerns more easily. It's a lot easier to get someone to form a positive opinion about the business if you're catching them, when they're receiving information for the first time. So it's really important that you don't share the model, before the meeting. When you get in the meeting, there's a lot here, and we're gonna see it in action. But I'd say a few things that are really important. One is going back to that notion of being into control, controlling the process. Your leadership is on display. Investors want to see that. So, you should show up to the meeting on time. You should have an agenda for what you want to accomplish during this meeting. Because if at all possible, you want to control the flow of the meeting, because you want to play to your strengths. So you want to control the flow of the meeting so that it goes in the direction that you want it to go in. If you kind of show up to the meeting, you're saying, hey, cool, so we're here to look at this model. What do you think we should do? They're going to take you in the direction that they want to go in, and that might not be the best direction for you. They may push you down some rabbit hole that doesn't play to your strengths. So, control the meeting, set an agenda, leadership on display. Don't get into the weeds unless the investor pulls you there, and we'll show how that works. But we want to stay high level. We want to stay strategic. We want to be talking about the business a lot more than we want to be talking about the model. It's kind of an interesting thing, but I think it'll make a lot of sense when I go through it. So think high level strategic, think talking about the business, think conversation, not a lecture. You're not there to tell the investor everything they need to know about the model. You're there to have a strategic conversation with the investor about your business, to answer their questions, to alleviate their concerns, and we'll see how that's done. And then after the meeting, it again goes back to this idea of driving people through the process. Make sure you've got a next step identified at the end of the meeting. Make sure you follow up via email. You say, hey, thanks so much for the meeting. Here's the next step. You're going to talk to the rest of your investor committee on Monday and then get back to me, or we're going to schedule that 30-minute, meet and greet with my co-founder, or whatever you decided that it was on the call. Excuse me. And then it's fine to share a copy of the model with them after the meeting, because you've already said your piece. You've already been there coloring the narrative, right? And controlling the narrative. You can share a copy of the model afterwards. or if you do decide to use Forecastr, you get a link. You can share a link like you would a Google Doc, and they can have access to the model that way, which is pretty neat. So couple of points there on the meetings, and now we'll get into to the real world example here. So I'll jump out of the presentation and I'll share with you our resources, our deck, our model. Real quick though, before I do that, just another opportunity. Any burning questions out there that anybody has before we jump in and see what Forecastr does? Cool. Let me stop the screen share on this and pull up my deck. So hopefully you can see this. So this is my full deck. So I'll go through first, and then I'll show you what I use for an intro deck. So full deck, problem slide, big problem, big market. Here's the solution. Forecastr is the solution. Talk about that. I talk about kind of the value that we provide through data. I talk about how we're like these other big companies that have been really successful. So I'm trying to make myself like these other big companies, saying, hey, there's a big prize here. We've got it figured out. This is how we're doing. These are our metrics, right? These are our growth metrics. These are our retention metrics. These are our unit economics, right? These are core things that should get the investor excited. I'm talking about how we're going to win, the competitive landscape, the partnerships that we build, the human approach. We got a great team, right? And then I get to the forecast right before the ask. We're raising $4 million to achieve these milestones, right? But right before that, we get to the forecast. And this is where I want to signal to the investor that we've got a financial model. We've got a lot of financial rigor. We've got great financial hygiene. We know the financial aspect of this business, and we're going to be a good shepherd of your hard-earned capital. I'm trying to communicate that to the investor with this slide. And I'm not going to get into the nitty-gritty on it. What I would typically do on a slide like this is say, hey, so first and foremost, we believe this is a venture scalable company. This is a very scalable company. We've modeled it out. And we've got a very detailed financial model that we use every month to run our business. I would love to spend 45 minutes with you walking you through our financial model. I think that would be a great bedrock for strategic conversation about the company. If I've done my job, and you leave this call interested in this company and in this investment opportunity, I think a second meeting next week where we go through our financial model would be a great next step. I'd love to do that with you. I'd say something like that. And then I would move on, so something like that. So that's my deck. Now, one thing you'll also see in this deck, I'll show you while we're here, is I have an appendix. So in my main deck, there's 15 slides in the main deck, right? Then I get to an appendix and I got a bunch of slides. I got a bunch of slides in the appendix. Why do I do that? I do that because in the main deck, I don't want to over encumber it with all this information. I just want to hit them with the punchy things that I think are going to set the hook. But then if someone says, you know what, yeah, cool, but tell me more about that channel distribution model because I want to understand that. Yeah, cool. I've already got a slide for that. I'm a step ahead of the curve. Tell me about that churn. What's driving your churn? I guess, oh yeah, cool. We'll have an analysis on that. And so what you want to do with the appendix is any of the key questions that you think you might get. If you build an appendix slide around it, you just look like you're a step ahead of the curve because every question they ask, you got an answer for. You not only do you have an answer, you got a whole slide built out around it. You know what I mean? You look really on top of the game. So that can be a really, really powerful thing. But then I also have an intro deck. So here's my intro deck, a lot shorter, still problem, still solution, still kind of size of the prize, growth metrics, unit economics, landscape, partners, basically why we're going to win and then the ask. So I've cut some stuff out here. And what I try to do on the intro deck, don't give them anything that they can use against you, basically. So like any weakness, exclude it from your intro deck because your intro deck, all you're trying to do is get a meeting set. A lot of times I don't even send the intro deck because I like to present decks, same reason on the model. But sometimes people want to see a deck. And so I'm going to only give them the exciting stuff. Look at the growth numbers, look at the unit economics, look at stuff that's going to be difficult for you to pick at, don't give them something that you think they might say, just give them some stuff that you think they might say, interesting. I got questions, there's not enough here. All right, I'm going to take this meeting because I want to learn more about this business, right? it's a funnel, and you're just trying to build interest, trying to build interest and intrigue, right? So leave some mystery in it, when you're doing those intro decks. Don't include the model in the intro deck, for example. Like that should only be included in the presentation deck. So a little bit on decks there. Hope that's helpful. We'll share those with y'all. And then, so my model obviously lives in Forecastr. It'd be shame on me if it didn't. So that's the model that we're going to be walking through today, is the Forecastr model. If your model lives in Google Sheets or Excel or anywhere else, this is all going to be the same. So you don't have to use Forecastr in order to do what I'm about to do. Although I do selfishly believe that Forecastr will help you do it. But if you use Excel or Google Sheets, it'll work just the same way. So what we're going to do here, if I'm walking through this model, I take like a 3-phased approach where I want to start with walking the investor through revenue and how we generate revenue. So that's what we're going to do first. Then once I walk them through revenue and I get them comfortable with that, I answer their questions, then I'm going to say, yeah, cool. If we're going to generate all that awesome revenue, then like we need resources. So I'm going to go from like customer acquisition and revenue, and we're going to go through that, to then like to go through the people and say, hey, here are the people that we're going to hire. Here are the sales and marketing expenses that we need to budget for in order to achieve our revenue milestones, right? The resources that you have are there for a reason, so that you can achieve the milestones. So you're going to talk about revenue, then you're going to talk about use of funds. That's the second phase. And then the third phase is going to be going to the financials. You're going to go to annual financials and kind of zoom out. And this is where you kind of talk about size of the prize and try to end with investment. So you're going to say, hey, great revenue milestones. If we're going to hit those milestones, we need these resources. What's going to pay for, if we play this out now 5 years, we get to the point where we're doing 90 million in annual revenue, big business, right? And that's why we're raising $4 million to achieve these outcomes. Like we're raising $4 million right now to achieve these outcomes. We've already got $1 million from current investors. We'd absolutely love for you to participate in this round. We think you'd be a great investor. This was a really great conversation. Give me a read. Where are you at with with regards to investment in Forecastr? What are your thoughts on participating in this round? We'd love to get a deal done here. Help me understand, and let's set some next steps, right? So that's how you're going to finish it. So you're going to start with revenue, then use the funds, then end with investment. And the reason why we do that progression is an investor cares majorly about revenue. So that is what the investor is going to typically concern themselves with, because that's typically the riskiest part of the business. The riskiest part of the business is typically on the revenue side. How are you acquiring customers? How are you monetizing those customers? This is largely where investors they have a lot of questions. They're very concerned, yada, yada. They're not usually as concerned with the expense side of the house, because revenue is the value creation side of the business. It's usually, the most important piece of the business. So we want to start with that, because we're here to answer their questions. We're here to alleviate their concerns. So, so we want to start with the area where most of those are, so that we get to that, and we're going to talk about that. Then we're going to go, end at the investment, because that's what we care about. That's what we want to talk about. That's what we want to know, is where are they at and what are the next steps, right? And so we're going to end with that so that we can form a clear next step before we get off the call. So start with the investor cares about, end with what you care about, get that next step. When it comes to kind of walking through each piece of the model, here's roughly how I would do it. So let's say that, I'm presenting to y'all as an investor group. We've had an initial pitch. I've done my job. I've convinced you all that there's some merit to this investment. And you're saying, hey, there's something here. Let's take 45 minutes. Let's walk through the model with Steven. Let's see what he's got to say. And so I would kind of say, hey, look, thanks so much for taking this time, to sit down with me and to walk through our financial model. We've put a lot of thought into this model. We do recognize that it's a model. It's not a crystal ball. It doesn't predict the future, but we've put a lot of thought into this model. I think it has a really good representation of how our business works. And I think this is going to be a great strategic conversation for us today. So I'm excited to do this with you. And I'm really glad that you took the time. First thing I want to do is I want to talk through how we generate revenue And if we're going to generate any revenue, we got to acquire customers, right? So the first couple of things I want to do is talk about how do we acquire, how do we monetize? Let's talk about that. I'll give you an opportunity to ask questions, and we'll have some conversation, and then we'll keep moving. So, this is our customer acquisition. First of all, we use this model every month, and so everything you're seeing in gray here up and through February is actual data. So these are our real customer acquisition numbers on a month-by-month basis. We use this model every month to run our business. It's the way that we understand, and kind of set and manage to our growth targets and de-risk those, as well as manage cash. So we're really serious about that. We've got a diversified approach when it comes to customer acquisition. We use a number of channels, but you can see the ones that have been the biggest. Strategic networks is a big channel for us. Techstars is a big channel for us. Webinars. This is our bread and butter. We exist within venture communities as a subject matter expert on financial modeling, and we essentially exchange that expertise for exposure to founders who may need our product, who may need our service. And as a result, we'll typically end up working with some pretty awesome founders as a part of those networks. So that's kind of our bread and butter. It's a unique insight that we've had, and that's worked really well for us. So that's a large part of our customer acquisition. Another piece is referrals. We get a lot of customer referrals, and we're really focused on building value for both founders and investors, so that there's kind of a viral loop between them. As founders invite investors who invite other founders who invite other investors, we get this really nice kind of organic virality, through that. So that's been big for us. And then organic domain authority is big for us as well. We want to be a thought leader. We want to be a domain expert. We rank really highly on organic search, and that's been big for the company as well. Currently, we're doing about 50 to 60 new customers a month, up from 30 to 40 earlier in the year. And if we zoom out a little bit, you can see, kind of what our biggest channels are long term. Other strategic networks is the biggest. Google, kind of an SEO is pretty big as well. We've also got quite a bit coming from those referrals channels, like I mentioned. So that's kind of an overview of Forecastr and our customer acquisition, the strategy, the milestones, where we're at. What questions would you have about customer acquisition? Or if you don't have any big questions, happy to move on to revenue. I'm happy to talk a little bit more about how we monetize and discuss that side of the house. So quick timeout right there. That's the general kind of style that you're looking for. Couple things I'll highlight on that style that you may have picked up on. One is, I basically didn't tell you anything about the financial model, really. Like, I didn't tell you about any kind of formulas or the math or how it works. I didn't really even tell you anything about assumptions. I didn't tell you about my conversion rate. I didn't tell you about how many partnerships I'm going to get. I didn't really get into the weeds very much. I studied high level strategic. I told you that I was glad you took the time. I told you we were going to start with revenue. I told you that we took a diversified approach. I hit on some of the major channels, the big bets that we're placing, and I told you why, and how those worked. I told you kind of how we're doing right now, and I told you what was important long term. Just like some high level strategic stuff. And then I opened it up. I said, hey, what questions or concerns do you have? And you as an investor, you may say, you know what? I really want to understand those networks, because that seems like a big piece for you. And how does that work? Are they exclusive partnerships? What do you do? Is that scalable, et cetera? Maybe I want to understand these viral loops. Maybe I don't really believe you. Maybe I want to understand, what your thoughts are on paid ads, or what is your conversion rate, or what's your sales cycle? There's all these questions I might have as an investor. And that's great. Like, what you want to do is get an investor talking about that, because if you do such a great job at that high level overview that the investor's like, you know what, look, I don't really have any questions. Like, you guys seem like you're all on it on customer acquisition. Let's talk more about how you monetize. Then great. Like, you just got through that whole section unscathed, very easily. You don't need to go deep into the weeds there. But if an investor does have questions, you want them to expose those so that you can answer them, so that you can alleviate their concerns and you can drive confidence. And that's why we want to do these high level overviews and then open it up for conversation and questions, so that, so that we can really kind of spend the time in the most targeted way possible.
Hey, Steven, just out of curiosity, is this model that we're looking at now, is this just like a dummy model for Forecastr, or is this our actual model?
Yeah, great. This is our actual model, baby. So we're building it in the open here. So it's our actual model. We acquired 529 customers last year, and a little bit little bit over 200 the year before that. Our goal is to get 900 this year. So this is the model we use every month to run our business.
Cool. And that was Jamie asking the question there. And as you are talking about communicating with investors, Jamie has another question here. And you might, I might be jumping the gun asking it, but are there any questions, or like what important questions should you ask the investor throughout the process? I know that you mentioned like kind of gauging where they're at and whatnot, but I did want to put that out there as well.
Yeah, it's a great question. So honestly, I would say there's a couple things you want to do. At the end, you definitely want to be asking, like, don't be afraid to make the ask at the end. Say, you know what, look, this has been great. I'll be honest with you. I want to get a deal done here. I want to see us get a deal done here. Like, what's it going to take to get a deal done? Where are you at? Shoot me straight. Like, don't be afraid to ask those questions. A, investors appreciate it and it shows leadership and maturity. And B, it's gonna cut through the noise a little bit, because investors will give you a bunch of BS. And you just want to, cut through that and try to get to the heart of it as soon as possible. So definitely ask that. Otherwise, when you're going through, the point of this whole thing is to draw out their questions, draw out their concerns so that you can kibosh them, right? And so the questions you want to be asking is, what questions do you have? What concerns do you have? What concerns, and you can say what, like, you can ask it like that. And if they're being kind of quiet, like, oh, nothing, then you say, no, then you can ask in other ways. You can say, it's like, so what's your biggest concern? Not what concerns do you have, or do you have concerns? Like, what is your biggest concern about our customer acquisition? What's your biggest concern? Then they'll be like, well, I'm a little bit concerned about this piece, right? And that's okay. You want to say, you know what? That's a really valid concern. I like to validate concerns a lot of times, even if I don't think they're that great. I'm like, you know what? That's a great concern. That's a really good point. Here's how we're thinking about that. Here's how we're approaching that. Here's why, from my vantage point on the inside in the captain's chair, I'm not that worried about that piece, right? That's the kind of stuff that you want to be saying. So then they can say, oh, well, Steven is kind of right there on the inside. He does really have the best vantage point. And he makes a good point, right? It's like, you want to draw those concerns out and you want to swat them away. So that's kind of what you want to be doing. Great questions there. Great questions. So that, and this will kind of carry all the way through. So we won't even go through it ad nauseum, but basically, like, once you do, customer acquisition, then you're going to go through the revenue side of the house. And remember, you've already met with the investor. So you may say, look, like, referencing, from our first meeting, you may recall, we're an annual subscription business, but we have these support subscriptions where we go above and beyond. We provide a lot of human support, and kind of out of the box financial function for our customers. Right now it's kind of an even mix, in terms of our annual software subscriptions and our tech-enabled services. As we scale the company, it'll be more like 80-20. So that's how we see the revenue mix growing. Really big opportunity for this business. I think there's no question this is a venture scalable company, and right now where we're at, we're doing about 120,000 a month in terms of revenue, close to 1.5 million in ARR. By the end of this year, we want to be just shy of 250,000 in monthly recurring revenue. So we're shooting for 2x year over year. What questions do you have, about the revenue side of the house, or we can move on to use of funds, right? And so keep that thing going. On the revenue side, similar deal to customer acquisition. There's any number of questions an investor may ask, but a lot of times they'll ask about unit economics. They'll ask about maybe price or customer segmentation. They'll ask about, they'll kind of, they may ask about retention. They may ask about your product, and so be prepared for questions like that. Like the general thing we're looking for here is, you're going to stay high level, but you got to be prepared to go deep in any number of areas, because you may get a question in that area. So you need to have some depth to you, right? So that you can answer anything, but you're not just going to give it away. Right? You're going to stay high level. And then if they ask you, then you're going to tell them, right? You're going to tell them this, you're going to tell them that, but not all the stuff in between. And that way you're optimizing the time for what they care about. You're answering the questions, but you're also not giving them anything to pick at that they didn't otherwise need to know, right? Because sometimes you gush all your information at them and you give them a concern that they didn't already have. Don't want to do that. Stay high level, stay strategic, let them pull you deep, be prepared to do so. And just keep working, like go through the revenue, talk it all out. On the people side, I think it can be really powerful to talk about really important hires you're going to make. What are the key hires that you're going to make in order to scale and hit those revenue projections? what are the key growth hires? What are the key product hires? What are the, what are the really important hires that you need to make? What are the gaps that you need to fill in your team? Or what are the roles that you're going to need a lot of? Like for us, we need account executives to sell, we need analysts to onboard. So we're going to give the investor confidence that we've accounted for that in the model. These are the things that you're going to be trying to do here. You're going to go through expenses as well. Expenses is usually pretty easy. I usually like to key in on the sales and marketing expenses because those tend to be kind of the juicier ones for folks. But it really depends on your business. Whatever the bigger expenses are, whatever the really material expenses are, those are the expenses that you're going to want to spend your time walking through. But you usually don't have to spend too much time going through expenses. That most of the time is here on the revenue side, and then kind of quick as you can. You want to get out to that income statement. You want to zoom out, and kind of get high level again. You would say, look, like end of the day, I think we've got a great business here. I think we've got a great team, great metrics, great company, great product. We've got a big pot of gold at the end of the rainbow here. Like there's no question this is a big business. We've modeled it out. We've got very reasonable assumptions. This is a big business and we're on our way. We are well on our way. We would love for you to participate in this. We would love for you to be a part of this. We think you'd be a great partner for us. Shoot me straight. Where are you at? What's it going to take? We'd love to get a deal done here. Give me a read on what you're thinking as far as the business. And let's talk about next steps. We'd love to do a product demo, we do a product demo when we do a model walkthrough, but you guys won't. So we'd love to do a product demo. I'd love to do a co-founder meet and greet, whatever. So try to really get that next step set, make sure you understand where you are in their fundraising process. That's really important to do. So that's pretty much the long and the short of it in terms of walking an investor through your financial model. Any other questions we have while we got Forecastr pulled up here before we kind of jump back into the presentation? We'll close out and then we'll open it up, for full on, Q&A.
I got a couple questions for you, Steven. It seems like one of them is probably applicable to what we're talking about now. In regards to the financial model, walking investor through it, how would you approach this if you're pre-revenue? And that question was asked by Kathy.
Yeah, that's a great question, Kathy. So if you're pre-revenue
or pre-seed, I'm sorry, pre-seed.
Pre-seed, okay, pre-seed. Well, so pre-seed, pre-revenue, everybody knows that you're going to kind of approach it in the same way. I think you should do exactly the same thing in the same style. The only difference is going to be, depending on where you are in the growth curve, you're going to tell a different story. Like for me, I've been in the market for 2 years, so I can look at this and I can say, hey, we got 2 years worth of historical data here. That's great for me. It allows me to build a lot of trust and a lot of confidence with investors because investors love historical data. Now, if you're pre-seed and maybe you're pretty early in that path, maybe you're pre-revenue, maybe you're not, but you're early in the growth cycle, then you're going to tell a little bit of a different story. You're going to say, hey, look, so here's the financial model we built for the company. We think it has we think it really kind of shows a great future for the company. And this is a model that we're going to use every month to run our business. We're going to use this model to set and manage the growth targets. We're going to use this model to make sure that we always stay on the right side, on cash, right? That we keep a healthy business going. Now we're early in the business, so I recognize that we don't have a lot of historical data, but we put a lot of thought into how we're going to acquire customers. And here are the key strategies that we believe are going to be really important, to us scaling the company and really, getting to product market fit. Here's how many customers we need to acquire in order to, we believe, position the company well for a seed round. Like you want to be talking about the milestones of that next round. If you are in fact seeking a seed round at some point in the future, if you're pre-seed, you want to say, hey, here we are right now, but we want to get to this point right here, which we think will position the company well for a seed round. So talk about those customer acquisition milestones for the seed, when you're going to get there, how you're going to get there. And then same thing on down the line. On the revenue side, talk about the revenue milestones that you need to get to in order to raise that seed. If you're pre-revenue, you may say, hey, we're not generating revenue yet, but here's when we're going to turn the spigot on, and here's when we're going to get to XYZ in revenue, right? So it's a similar kind of flavor and style, You just need to kind of customize it to your context, if that makes sense. Great question. Any other questions in there, Kalvin?
Oh, sorry. Yeah. So I don't know what your presentation has in store, but there was another question in regards to a data room. So Dana was asking, does Forecastr have the ability to do a whole investment room, which I'm pretty sure they meant data room. One of the presenters was mentioning having a data room was so helpful for fundraising. So maybe if you could just speak towards that a little bit.
Yeah, absolutely. So Forecastr as like a product doesn't have a data room. That said, we do have a great data room template, and I think Kalvin, if you have that on hand, it's something we could share in the chat. So we've got a data room template. This is literally our data room, but like it basically looks like this is a file folder kind of structure. But in here, you know, we've got all our corporate and organizational documents, right? You've got you got people documents. You've got, you know, a link to your financial forecast, which we have just kind of the output as a PDF. Like, so you got all this stuff. So it is very important to have a data room. Data room's worth its weight in gold. It can be really easy to set up, and we can share a link to the folder structure. You can just copy it and use that if you'd like. So we just do our data room in Google Drive. So.
Cool enough. And then the last question is, how long does it take to create a forecast?
That is a great question. So it really, that's really, it depends kind of a question, right? So how long does it take to create a forecast? Depends on the software you use. In Excel, it tends to take quite a bit longer. You're doing everything yourself. In a tool like Forecastr, you can easily get a forecast up and running in 30 minutes. Now the key is like how well suited are you to building, you know, forecasts and stuff like that. So if you're pretty good with finance, if you're pretty good with picking stuff up, you can build a forecast really quickly. If maybe this isn't your forte, it's not your cup of tea, then it might take you a little bit longer. And so, you know, and that's why we do that 30-day white glove onboarding, not because it takes 30 days to build a model. Usually the model is built much, much quicker than that, but because in some cases, it'll take 30 days to really get comfortable with every aspect of the model, to polish it all up, you know, that kind of stuff. So we try to get people from 0 to 1 as fast as possible, and then really work with them to like make sure the model's great. And so you can build a forecast, you know, quite fast, but then you want to make sure it's producing the right numbers, right? Like, is it defensible? Is it telling the story that you want to tell? And so, you know, usually it'll take a few iterations, much like a pitch deck. You know, when you build a pitch deck, you got to frame one out, get a version of it done, but then you'll iterate until it's a really good deck that tells a really great story. Models just the same.
Rock on. Awesome response there, and great question. And we don't have any more queued up right now.
Cool. Well, I'll back over here and just kind of finish her up. And if you got any other questions, please do throw them out. But just to reiterate, absolutely would love to work with anybody on this call if you're interested. And we do offer 25% off to any Grid 110 companies. So Kalvin can drop a link in the chat. Love to chat with you if that's something that you're interested in. We'd be thrilled to go to work for you. We do a 30-day onboarding with an expert analyst, and we're here as a support resource forever. We really take a lot of love and care, you know, with our customers and the founders that choose to work with us. So love to do that if that's something that you're interested in. But again, please don't feel any pressure from me. And that's all she wrote. That's all we got. So happy to answer some more questions. We got about 5 or 6